Welcome back to the AI Breakdown. Today we are talking about Nvidia's earnings report. And just to give a sense of how much more significant the market is treating this than just the earnings report of one company in one quarter, let's look at this tweet from noted Wall Street analyst Dan Ives. He writes, "We view last night as a historical moment for the broader tech sector and a sneak preview of what is on the horizon after hearing the guidance heard around the world from the godfather of AI, Jensen and Nvidia, a 1995 internet moment on the doorstep for the tech sector." These are some big bombastic terms. And while of course it's worth being skeptical anytime you hear people start comparing things to major previous events, Dan is far from the only person who feels like that's where we are when it comes to artificial intelligence. Now, before we get into the earnings report, let's talk about what else has been going on in markets this year. First of all, we've had a historically fast rate hiking cycle from the Federal Reserve. In the wake of being caught out for not moving fast enough on inflation, the Fed wrenched rates from the zero interest rate policies of the entire teens decade up over 500 basis points over the course of about 18 months. Now, that has had major impacts on numerous sectors across the economy. One of the consequences of that fastest rate hiking cycle in history was the banking crisis. Numerous banks in the US found themselves with a duration mismatch in which the value of their assets, which were long dated, was lower than the value of their deposits, which people were increasingly pulling out for a variety of reasons, including, in some cases, challenges in specific industries like crypto and tech, but in other cases just because they could move their money into money market funds and be yielding more. Banks had to sell their long-dated bonds for below their value, thus creating a vicious spiral that eventually led to the collapse of banks like Silicon Valley Bank. Okay, so we now have a fast Fed rate hiking cycle, we have a banking crisis, and now on top of that, we've got outright deflation in China. China has been a drag on the global economy for a number of years now, as the zero COVID policies in that country created sustained impairment of supply chains and problems with global economic networks. And with deteriorating economic fundamentals, people are worried that the problems in China are going to spill over to other parts of the world as well. And yet, throughout all of that, this is what the chart of the S&P 500 looks like for this year. Year to date, it's up 15.45%. And if you want to know why, look no farther than this man, Jensen Huang. Nvidia has been the absolute darling and all-star representing the larger excitement around artificial intelligence following the launch of ChatGPT last November. And there has been a lot that's remarkable about Nvidia. Here are just a few of the numbers from the earnings report shared yesterday. Net income for last quarter was $6.7 billion. That's a 422% increase from quarter two last year. 171% sales growth on an annualized basis to $13.51 billion. Gross margin expanded by 25 percentage points to 71.2% compared to Q2 of last year. Quarter three sales guidance of $16 billion, which is a further 18% quarter-over-quarter growth or 93% annualized. And importantly, when it comes to Wall Street, it's not just about how a company performs, it's about whether it beats expectations or not. Nvidia had incredibly high expectations coming into this, and it still blew them out of the water. Analysts had estimated $2.07 of profit per share. Nvidia hit $2.70 per share. Analysts had estimated $11 billion in sales. Nvidia hit $13.51 billion. Now, one of the big drivers was data center sales. Ben Gilbert tweets, "I am literally speechless. Nvidia just grew data center sales 141% in a quarter. That's not compared against this quarter last year. That's literally growth in 3 months. $4.3 billion to $10.3 billion. That's with the constraint of needing to ship physical hardware to customers. Nuts." Now, half of Nvidia's data center revenue comes from cloud providers. Growth in data center revenue from delivery of compute was up 195% during the quarter. And just for some reference, Meta expects to spend $30 billion this year on data centers, while Microsoft reported a record $8.9 billion in capital expenditure last quarter. CEO Jensen Huang leaned into this in the earnings call. He said a new computing era has begun and said we're not shipping close to demand. Now, one of the interesting things that's happening now is that everyone is trying to figure out just how Nvidia got to this point where it's such a dominant player in the space. The New York Times just wrote a piece called "How Nvidia Built a Competitive Moat Around AI Chips," and effectively it argues that there's really two parts to the success. The first part was being early. Nvidia has been at the forefront of innovation in chips for effectively the last 30 years. And that means that they saw AI coming a lot earlier than most others did. As the Times writes, Nvidia gained a reputation for consistently delivering faster chips every couple of years. In 2017, it started tweaking GPUs to handle specific AI calculations. The second piece is that Nvidia didn't just sell chips off the shelf. It sold entire systems that could get customers up and running. The Times continues, that same year, 2017, Nvidia, which typically sold chips or circuit boards for other companies' systems, also began selling complete computers to carry out AI tasks more efficiently. Some of its systems are now the size of supercomputers, which it assembles and operates using proprietary networking technology and thousands of GPUs. Said CEO Huang, this type of computing doesn't allow for you to just build a chip and customers use it. You've got to build the whole data center. Now, a third piece of their success, which is more recent, is that Nvidia has been very actively investing. Again, from the Times, to further extend its influence, Nvidia has also recently forged partnerships with big tech companies and invested in high-profile AI startups that use its chips. One was Inflection AI, which in June announced $1.3 billion in funding from Nvidia and others. The money was used to help finance the purchase of 22,000 H100 chips. Mustafa Suleyman, Inflection's chief executive, said that there was no obligation to use Nvidia's products, but that competitors offered no viable alternative. None of them came close, he said. Now, having Nvidia as this huge leader comes with downsides as well. As the Times points out, given the demand for its chips, Nvidia must decide who gets how many of them. That power makes some tech executives uneasy. Clement DeLange, the chief executive of Hugging Face, said, "It's really important that hardware doesn't become a bottleneck for AI or a gatekeeper for AI." All in all, this is an interesting countervailing moment to the popular narrative of AI hype ebbing. It may be the case that consumers are using ChatGPT slightly less than they were a couple months ago, and that we've grown a little tired of the constant another crazy week in AI posts from influencers. But what's also clear is that companies are going all in on this technology, that they see it as fundamentally shifting the paradigm in which they operate and view the need for compute as an existential challenge to be solved. So even if Dan Ives isn't quite correct, if his tweet declaring this the guidance heard around the world in a 1995 internet moment ultimately seems a bit hyperbolic, it is certainly the case that last night's earnings call was not just another earnings call by any stretch of the imagination. Anyways, guys, that is going to do it for today's AI Breakdown. If you enjoyed this, send it to your one stock friend, especially that one who's been skeptical of AI. I'd love to recruit them to the AI Breakdown community. Thanks as always for listening or watching, and until next time, peace.